Tackle today, Matt and Mark Justice from Tackle Trading, bringing you all the charts, the analysis, all of the news so you can be informed about your trading decisions in just a few minutes. A little uncertainty still hanging over the market from Israel and Iran. Lots of stocks in the news, Tesla missed deliveries, lots of interesting things to discuss. Matt, when we look at the technicals, interesting doji day in the market today following the little bit of volatility yesterday. And sometimes it takes a minute to work out some of the uncertainty that a geopolitical event brings, doesn't it?
Yeah, it certainly does. The last time we went through this situation in the Middle East was April of this year. And if you'll recall back in April of this year, once that volatility did hit the market, you did see some follow through downward pressure. Now the difference being you clipped a major support level called the 50 period moving average back in April when that news hit the market that Iran had launched, what was it, upwards of 300 total missiles, drones. I think it was like 90 ballistic missiles. Fairly significant increase in risk there in the Middle East, and you did see some follow through until it stabilized and gave you a little bit of consolidation. And Mark, that was right before one of the better trends we've seen in the market this year. And so yeah, it does take some time for the market to settle back in, but it started settling in fairly quickly yesterday. It's going to be interesting to see what does happen next here. But from a technical perspective, I think you gotta appreciate the market holding in a little bit yesterday. Now the difference technically when the volatility hit the market, you were at a little bit of a better positioning from a technical perspective, kissing up against resistance, hovering against that 90 MA versus testing a 50 period moving average in April. And so you did have a little bit of a different technical setup where you had, structured support underneath to support the market, unlike you did in April. And so that may be one of the reasons why we didn't see that additional follow through. But it's also a different environment economically where the market's focused on labor data instead of inflationary data. We're in a cutting cycle instead of in a pausing cycle. And so there are some fundamental differences as well. But it's anytime that news hits the market, you're obviously going to be a little bit concerned in the short term, and you're going to want to see volatility subside. Now, we are seeing a little bit of that today, but is that the calm before the storm? Is that the final conclusion of volatility? I think we're still waiting to see that.
Yeah, I know that one of the things that you and I talked about in the Traders Lounge is that if we break out of this range on unemployment on Friday or early next week, it will give me more confidence in that breakout if given the fact that we had that little burst of volatility this week. You were highlighting the cues there, a little bit of a different technical pattern on the cues.
Well, you got a couple different technical patterns. Yes, you got a little bit of a bigger pullback on the cues than you're seeing on the spiders, but I wouldn't describe it too differently here. Just a standard pullback is what you're looking at there. IWM still trying to hold firm against their pullback, and kind of last stage in that pullback is right around 215. So keep an eye on the 215 level on IWM. But no, I'm not seeing a substantial difference in the indexes today.
Yeah, listen, while the Israeli Iranian conflict is taking center stage, interesting little trend developing in the labor market data this week. Yesterday, we had the JOLTS report that totally got ignored because missiles were flying. That was a sizable beat. You also reversed a 4 month decline in misses. ADP non farm employment report had missed the last 4 months in a row. That was not the case. We actually had a pretty substantial beat. Matt, if labor market confirms this on Friday with the big event, the monthly unemployment report, you have a narrative that emerges from this week, one of a labor market that is pretty resilient and hence an economy with GDP at 3%. That's a tough recessionary argument if that's the narrative that emerges.
Yeah, if the market is going to focus on labor, and that's rightly so, given the fact that's what the Fed told us to do, it's been a pretty good labor start to the week. Yesterday, with the JOLTS report, had one of its better reports in the last year. ADP non-farm comes in with a beat here today, and a pretty sizable beat that we just have not seen recently in ADP data. You go back to June, you've been missed, and we're not talking small misses there. We're
Yeah, I
talking
know.
sizable misses there, and so especially last month. Remember, last month we had that massive miss on labor. Everybody got concerned. The market started selling aggressively. Everybody started getting worried about September seasonality, and all of a sudden the market stood firm. So it's going to be interesting. But yeah, Mark, you are right. We're seeing a trend shift here on the labor. Labor for the last 4, 5, 6 months has been a concern. Little slight drift, to the point where over months and months and months, people started talking about the SOM roll. And all of a sudden, you and I were like, nope, we're not there yet, guys. A little too premature there. And ever since then, Mark, ever since they started posting that SOM roll, labor market data has been a little bit better than expected. And it certainly does continue here today.
Yeah, we're going to write about this in the Tackle Trading newsletter this weekend. We'll see on Friday. We'll see how it plays out. But this is very encouraging data at this point. Lots of individual stocks in the news today. What do you have for us?
Yeah, there are lots of individual stocks in the news. There's about 10 different companies that had individual stock news here today. But the three of the bigger ones here, you got Tesla with reporting deliveries here today. They came in at 462,890,000. That was a slight miss, about a 7K miss against expectations. And so there was a little bit of pressure on Tesla here today as they did come in with a miss on deliveries. You also have the Chinese EV conversation happening right now with China stimulating their market, a couple positive reports, upgrades on Chinese EV companies. That's putting a little bit of pressure on Tesla's stock as well. Nike also had earnings here today. Not the traditional kickstart to earnings that JP Morgan is, but Nike is one of the first companies to report. And they had an interesting report here today where they did come in with 70 cents against an expectation of 52 cents. So really good beat on EPS. But on the guidance side of the equation, they withdrew 2025 guidance. They did update their fourth quarter guidance for 24. But when you withdraw your complete 2025 guidance, that's obviously going to take the conversation on that day. And so Nike gaps down a little bit on that guidance concern. And then Lamb Weston was also in the news here today, as they do report earnings as well. And they came in with 73 cents. Expectation was 73 cents. So right there against the expectation. However, they also lowered full year guidance as well. Not a big guidance downgrade here. More on the ranges. They lowered the lower end of the guidance range. They lowered the top end of the guidance range, but still a fairly significant lowering of guidance, I would say. Not on the level of Ford, removing their complete guidance. Let's take a look at these three stocks from a technical perspective. Obviously, Tesla's on the deliveries, they're going to gap down. But Mark, they were also up against a really important resistance level as well, a little bit overextended, a little bit of a pullback type situation now in the middle of the bull range between the rising 9 and the rising 20 period moving average. They do have earnings coming up in a couple weeks. That's a little bit of a pullback going in front of that earnings report there in 2 weeks. Nike did report earnings today, obviously, and when they removed their full guidance, a little bit of a downgrade, and they also had a gap down here, gapped all the way down into the 20 period moving average. A little bit of a choppy price action, no doubt about that. When you're looking at Lamb Weston has an interesting look here today, Mark, as they did lower their forward-looking guidance, came in line on the EPS, slight miss on the revenue side of the equation. One of those situations where we did see a proper response gap down, but it also fired right back up, Mark. And we've seen this a couple different times. ASO was one of those recent ones from a few weeks ago where a gap down fired back up, and you saw that nice little bullish move after that. Hasn't really done anything since then, came right back down into the gap out channel. You see that on Lamb Weston a little bit here as well. Going to be interesting to see what Lamb Weston does as they're trying their best to reverse here. But that's all the stocks we have in the news here for today.
And getting over to global markets, I know you are fixated on the dollar chart. Share your analysis and then fire through some commodities for us.
Yeah, dollar's interesting here. It's been very interesting over the course of the last week or so, as you're seeing just a real big lift off here in the dollar. And one thing when the dollar does do this, historically, when the dollar goes up fairly aggressively, and it's going up on two things. Slight beats on the labor side of the equation. The market has to reprice that in. And number two, getting a little bit of a safety bid over the last couple days regarding the Israeli-Iranian situation that is obviously very concerning in the Middle East. You're getting a safety bid, you're getting a little bit of a bid on the positive economic data. And typically when you do have a dollar move like this, you typically see the S&P hold back a little bit. You typically see gold come down. You typically see the industrial metals come down. And we're not seeing that. We're not seeing the commodities perform today the same way they have historically, given a pretty big power move out off the dollar. Like I've said for a little bit of time now, Mark, I'm not too concerned about the dollar against commodities until you start talking about a confirmation reversal. And that's not the case until we start talking about the 50 period moving average. And so the dollar is certainly a little bit of concern, but commodities are not showing that same type of volatility. Gold here hovering against a flag high base, looking pretty good. Silver holding really firm against that multiple time frame. Obviously, a little bit of a chop, but just a flag base pattern is not going to be too concerning. Copper here, obviously forming a little bit of a high base flag base pattern as well. And so you do have some very interesting developing patterns in the commodity space, from gold's high base momentum environment to a multiple time frame situation on silver to a obvious momentum situation and secondary pattern here in copper.
Yeah, listen, a lot to talk about in the Traders Lounge today. You will be joined by technician coach Frank Martin. It's going to be a great lounge. We have great lounges every day. We got a great community. We got a great product. Come be part of it. TackleTrading.com. Sign up for that 15-day free trial.